Dhiraj Agarwal is with us, Managing Director at Ambit Investment Managers. Dhiraj, good morning. Good to have you with us here. Thanks very much for your time as always. What after this spectacular move, Dhiraj, what are you telling clients one should do? Stay the course? I mean, one thing we've heard is many foreigners who perhaps were to come back next year, perhaps, prepone allocations with what has happened last week with election results, etc. Your thoughts?
Yeah, so I think at this point of time, looks like there could be some more upside because, one point to observe here is that almost every single risk that the market was focused on is pushed back to at least April or May. So, the general expectation is that the US will cut rates somewhere between March and May. So that risk is pushed out by 3-4 months. With the fantastic state election results for the current ruling central government, the entire political risk is pushed out to at least May of next year when the general elections happen. So barring corporate results season, which will start second week of January, there are no significant risks at this point. And partly because of the cool-off in the US bond yields, you've seen OFIs come back to the market also.
All right, it's actually a very good screen. I mean, the Nifty Bank is up almost about 80 odd points right now. And we're building on to our gains, so lots to talk about in terms of individual names. Just want to get to some double-digit gainers as well. J&K Bank is now inching towards almost a 7% rally. Dixon Tech, of course, has been in focus, as we told you. And a couple of other names. Aster DM is up almost about 2 odd percent. And IRDA, of course, 3% higher. Dhiraj, thanks for joining in. Wanted your thoughts on how to approach IT now. We're seeing a spate of C-suite resignations, actually. We saw it with Wipro, now with Infosys. But a lot of people believe that this is par for the course, especially in a high-growth sector like IT. Your thoughts? Would you stay invested in such names despite these resignations?
Yeah, these resignations by itself should not change much in this sector. I think the bigger call in the IT sector at this point of time is how much US slows down next year. The jury is still out, whether it's soft landing, hard landing, or no slowdown at all. In fact, interestingly, one current view in the market is at loggerheads with each other because one expectation is that US will cut rates by more than 200 basis points next year, which is predicated on the fact that the US economy should slow down meaningfully. And if the US economy does not slow down meaningfully, I think the rate cuts will disappoint. So IT view is linked directly to how much slowdown we see in the US next year. FY24 is in the bag. There is some amount of mixed views about FY25 still in the market. We will have to just wait and see how the US economy does in the next 2 quarters.
Hi, Dhiraj. Good to see you. And as always, I think you have a long short fund, right? How are you positioned out there?
So we were very long till a few days ago. We are slightly long at this point of time, but still long biased. We reduced a little bit of our longs in the last few days, given the very strong rally. Not to say that the fund is changing the stance from bullish at this point. I see some more upside, as I mentioned at the start of this call.
Okay. All right. So, trimming a little bit of the long position, but still more long than short, in terms of that fund. Dhiraj, we have been talking about this. There's some of those big private sector banks out there. They are there. They're looking very juicy if you want to add to your portfolio as a portfolio stock. The names I'm talking about is Kotak Mahindra Bank and HDFC Bank, who have been relative underperformers. But those portfolio stocks, they're taking time to actually, perform in line with the market. Do you think 2024 is going to be a year where we see some of these heavyweights come to the party and, in fact, outpace the returns that you're seeing on the headline index? Because for the time being, the smaller banks, the banks in the broader markets have done much, much better.
I think that's a very highly likely scenario for 24. There's a lot of mean reversion and valuation correction in the mid-second liners, etc., which has already taken place. Compare that to a lot of frontliners, not just in banking, but across many sectors. The stocks have consolidated for between 2 years, 1.5 years to 3 years, whereas the earnings have actually kept growing at the normal trend line pace, which basically means that valuations of a number of these names are down 30 to 50%, depending on which name we are talking about. And at this point of time, looking very attractive. So I would certainly agree with this statement that in 24, there could be a shift in terms of relative outperformance of the frontliners and large caps, including banks.
Okay, that's on banks. And we also talked about IT. so many other spaces, right, that are picking up. So I wanted to talk about them one by one. This whole renewable energy space has now suddenly become the hot topic. So all of these stocks, Inox Wind, Tata Power, the Adani Group stocks as well, IRIDA and green financing. But the run-up has been really sharp. Is there still more to go? Do you think this is a structural growth story, and would you put money to work here?
Structural growth story, yes. Whether I'll put my money to work here at the current valuations is a bit doubtful. So we saw that, and we have discussed on this channel a number of times, names like Zomato and Policy Bazaar in the past. If you recall, in the initial part, the stocks went vertically up, and then most of them actually corrected down 50 to 80%. And after that, they have started moving up again. So this always happens in any new sector. In the initial part of the sector optimism, markets just doesn't know how to value them. And the stocks tend to move and overshoot or discount multiple year of earnings or multiple year of performance in a very, very short time. And then it does a course correction. So I wouldn't chase these names here. As a business, it's a structural story, 100%. Renewables is here to stay and will keep on growing, but not at the current valuations in terms of stock prices, perhaps.
You know, the other thing, Dhiraj, which I think there's more confidence in this team is Make in India, right? Import substitution, etc. So Dixon is the used to be the poster boy. Now, of course, you've got so many others which are listed, and they've all done well. But Dixon is back up, is taken out some important levels. I mean, highs of the last 2 years. There's this tie-up with Lenovo, which has now been announced. By the way, we'll be speaking with the management a little later. But what are your thoughts on Dixon, if you have a view here, or what you like the most in this space?
So again, this space has the same issues. The story is long-term and is structural, but at the same time, I difficult to wrap my head around valuations of a number of these names at this point of time. And once again, there could be a case of multiple years of earnings performance getting discounted today. The one pinch of salt I would mention on this entire space story at this point is that at some point of time, India will need to backward integrate into component manufacturing. At this point of time, margins in most of the EMS companies is broadly similar to the PLI benefits, which basically means that ex of PLI benefits, that the companies would still struggle to make profits. But it's the beginning of the story. Auto story started in a similar way. If you recall, when Maruti came to India, it was 90% Japanese components, and now it's 90% Indian components. So these things take time. It will play out. And again, they are in the momentum phase right now. I would just say that if one wants to chase momentum, fair enough. But if one wants to try to justify the valuations, it will be tough.
Dhiraj, in the past, we've spoken about Zomato. You're a fan of it?
At this point, I'm not too sure, but yeah, as a theme.
I mean, earlier, I think, Dhiraj, earlier on you were quite constructive on the stock. So you're saying it's run up a little ahead of itself?
Yeah, it's almost doubled in a very short span of time, right? So I think the business will continue to do very well in terms of timing. Entry and exit in the stock is a little bit of a fine-tuning matter.
All right. I wanted your thoughts also on the housing finance space, because we, of course, going to talk about it now. But this is a space which is picking up a lot, right? Something like a PNB Housing Finance, looking at AUM growth of around 17-18%. From an investor standpoint, does it make sense for you?
In fact, this is one segment of credit which has continuously grown at a very steady pace. So, if you look at the component of credit growth in the last year and a half, it's largely housing finance, consumer finance, unsecured consumer lending. And corporate lending is just about started to pick up in the last few months. The corporate lending has been slightly weak as compared to the other two segments in the past. So we are seeing buoyancy in the real estate sector and housing finance. That also, I think, is here to continue. Across real estate names, the projects are getting lapped up as soon as they are launched, especially in the premium segment. So this will continue to remain a high growth sector.
Dhiraj, your team at Ambit has initiated coverage on these capital market plays today, I think. There is CAMS and KFin. Just want to run us through, the ideas here?
I've actually moved on to the buy side within Ambit. So I'm not that plugged in. I'll have to call the analyst and take the
So you'll have to
presentation
call the
back.
analyst to point taken. Thanks very much. Thank you very much, Dhiraj. We'll actually invite the analyst who's written those notes and kind of understand. But that's another space, right? I mean, capital market intermediaries which have done phenomenally well. And again, a runway for growth seems to be pretty long out there. So that's Dhiraj with his perspective.